Welcome to the ARMR Report morning meeting. I'm your host, Brett Rosenthal. I'm coming at you every day at around 9 o'clock for a quick 5-minute course on what we'll be doing on our trading desk. I'm going to talk about some trading ideas and really investing. Just try to give you a picture of what our trading desk looks like. We're managing real capital here. It's my own personal capital and that of individual investors. All of it's managed through Interactive Brokers. Don't forget ARMR Report. It stands for Algorithmic Risk Management Research. So what we're doing on our desk is we're doing fundamental analysis. We're meeting management teams at companies. We're building a whiteboard of investment themes we want to be involved in. But we use the millennial tool of algorithms to help us execute better. All right. So, of course, I come at you at 12 o'clock every day with a longer discussion on events and whatnot. But I wanted to start talking to you for just about 5 minutes every morning to let you know how we're getting the trading desk ready. It's a live desk. I've got screens all around me if you could see it. And so I'm getting myself ready for the day. I guess the point of this morning's call would be there are some positive developments occurring in the market that would make us be a little less bearish at the moment. So we're still stalking the bear, and the market's run right up to the downtrend that we've been talking about, which is a typical rally in a downtrend. So nothing has occurred yet on the top 5 indexes that we use as our guide to add risk or subtract risk. So we have proprietary algorithms on the S&P, the NASDAQ 100, the Dow, small cap index, and the momentum index. Those 5 indexes drive our decision-making process. And we have algorithms for the volatility and behavior of each of those indexes. So we're still risk off across the board there. But it is important to notice changes in the market so that when we get a risk on opportunity and our algorithms are saying, okay, now's the time to get started, it doesn't take you by surprise. And so there's been some changes. So far this year, the small cap index is leading the market. Now, you all know, who've been following the ARMR report last year, that we were pounding the table on the 24th of September, telling you to take risk off because small caps were leading the charge lower. Okay? And I've been talking a lot, and when I've been writing a blog post, you can find it on our website, rosenthalcapital.com. Click on algorithmic research. You'll see the blog post with a big paw print of a bear. And I call it stalking the bear. And one of the paw prints is that small caps were leading the market lower. That's not happening so far in 2019. In fact, the opposite's happening. Small caps are outperforming the big cap indexes. So that means risk is on so far in 2019. Now, the first couple of weeks of any new year, there's a lot of strange cross currents. So without our algorithms telling us to really put risk on, these things are just interesting points to notice when you're starting to determine how you want to build your investing process in 2019. This is not about day trading or trading stocks. This is about, do we want to put investment capital to work right now? And I wanted to say on the call, there's a couple of things developing that look positive. One, small caps are leading. That's good. There's another index we like to follow, the Momentum Index and the Investors Business Daily ETF of Innovators. FFTY is the symbol. Foxtrot, Foxtrot, Tango, Yankee, FFTY. And the Momentum Index, MTUM. Mike, Tango, Uncle Mike. Okay? In a bull market, in a good market, those indexes will outperform the S&P, outperform the big indexes. And they're doing that right now in 2019. So along with small caps, that's a very positive thing. I'm also a big fan of the William O'Neill style of investing. It's kind of how I got into the business 30 years ago when it was really, really good. How to Make Money in Stocks is a book you should read if you haven't read it yet. It's very valuable. It's a great foundation for how to invest. It's written by William O'Neill. How to Make Money in Stocks. Go look it up. Go Amazon and Kindle it, whatever. You got to read it. And so following the O'Neill approach, the market had a follow-through day on Monday, which means it's time to start buying stocks according to O'Neill. Now, I don't do that. Okay. We use our algorithms to determine when we put money to work, but it is another positive sign to see that happening. The negatives, let's go back to why we're still in cash. The market has simply rallied to the top of a downtrend. And so I'm starting to look now for clues that the downtrend is going to begin to reassert itself. And if it does, I'm going to be putting shorts out. I'm going to be buying puts. I'm going to be literally shorting indexes. I don't just do that when it hits a price, but when it hits a price, I start looking for the behavior of the bear market to begin to reassert itself. That'll be small caps start underperforming. They start leading to the downside again. We get big moves up in the morning that fail in the afternoon. If that starts to happen right at the downtrend, then we start getting a little more negative, and I'll start putting shorts out, and I would expect a retest of the lows. Don't have that yet. So the takeaway from this quick morning meeting is we're still day trading. We had a great short sale off of the gap open yesterday that I talked about in the calls yesterday. There's not a real gap open today. It's just kind of a small gap. So it's not big enough for me to get excited about putting a long or short on. I like gaps of more than 1% on the S&P that get me to make a trade immediately. So I'm not going to be trading in the first 15, 20 minutes this morning. I need more of a move in one direction or another to really get me to get involved in this market. But the gap closure was ideal yesterday. It was like literally taking candy from a baby. So now we're going to have to wait to see how's the market open, what's the move off of the open, is it big enough with a reversal on volume to get us to go long or short? I don't know. We'll have to see. And if we start getting paw prints again, weakness in the small cap index that outperforms on the downside, a market that goes up to this overhead area of downtrend and then can't, it starts to churn, go sideways, weakness in the afternoons, that's when we'll start putting investment shorts out. But right now we remain in a cash position, long precious metals position, looking closely at our marijuana investments. We have a big interest in those stocks, but we're not there yet. Still looking at it. And I'll get back to you at 12 o'clock with what the details are and how things are trading. Thanks for listening. I'll talk to you at noon. Be careful out there. Be safe. But don't forget, number one thing Wayne Gretzky said. You miss 100% of the shots you don't take. Don't let your ego get in the way. If you see an opening, take a shot. It's okay if you take a loss. You use stops and be defensive. Take care, guys.